Hi friends, today we are going to learn how to do currency trading in Zerodha. If you have the Zerodha Kite application, it's extremely easy to do currency trading over here. Now what does currency trading mean? Currency trading mean that you can deal in USD, Euro, JPY, Pound Sterling, anything that you want. You can take those and you can trade in those. So over here, there are several future contracts that we will look at. So to do currency trading, head to your watch list. Within my watch list, you will see I have a new watch list called currency, and there are different kinds of currency in futures with different expiry, which I can trade over here. Now, how do you add these? So there is a search bar in your watch list where you can go and you can say USD INR, and you will get your currency pairs and different contracts with different expiry. So there is a weekly expiry over here and there is a monthly expiry. So let me explain you what these things mean very quickly. There are 2 or 3 different things over here that we need to understand. First is, you may be wondering what is BCD and CDS. This is the simplest to answer. Then we will understand what does USD INR mean and how is it different from INR USD, if you may ask. And then we will understand what does a March future mean and what does 3rd March future mean and how is it different from a 10th March future. So when you are doing currency trading in futures, you are basically saying that, hey, today I am standing on the 2nd of March. When we reach the 10th of March, I think the USD price will go down, and that's why I will short it and make a profit. So there is a contract which you have taken which is expiring on the 10th, and by then you are estimating that the price may go up or go down, or you may want to lock the rate today for a transaction you are doing today. For more understanding of how FNO work, I have a dedicated video on how FNO works. You can take a look at that. When we talk about what is this BCD and CDS, it basically just means that BCD refers to contracts on the Bombay Stock Exchange. CDS refers to contracts on the National Stock Exchange. So we have National Stock Exchange and Bombay Stock Exchange where we do our equity trading. Similarly for currency, you can choose either. You would generally not find much problem with liquidity or price in both the locations. Now, what does USD INR mean? Let's come back to that. Whenever you see a quotation for a currency in this format, there is a way to read it. It may also be a crypto pair. You will often see in crypto exchanges, they will say BTC INR, for example. This basically means whatever is your first currency over here in this pair, that is your base currency. And you are saying, how much of this second currency do I need to buy this? So if I say USD INR, I am saying for a particular given quantity of USD, how many INR do I need? Or if I say 1 USD, this 1 USD will always remain constant and the price that will change is INR. So INR price may keep going up or keep going down. If you reverse it, in which case what will happen is that the USD price will keep going up, keep going down, and whatever is your INR input will remain the same. For example, to just make it simple, let me just click on any one of these. You will notice over here, if I say a USD INR graph, you will see it's quoted at 82,655 because the price is denoted in INR. Now, if I go and say, let's first look at the chart. So whenever I look at the chart over here for this kind of a contract, you will notice that it's a USD INR chart and it is always, the whole chart is denoted in INR prices. The INR price may go up, go down, which is basically saying for 1 USD, what is the Indian rupee price, and that graph can be seen over here. So when you are putting in your trade, you would be predicting or you would be analyzing, you will be estimating what this INR price will be at the end of the contract and taking your trade. Now, when we say a future contract, if it is the March future, how is it different from 3rd March and 10th March? These future contracts, they have a weekly expiry and they have a monthly expiry. Your weekly expiry in this case is always Friday, 12:30, and monthly expiry is always last Friday of the month at 12:30. So if you notice over here, 3rd of March is a Friday, 10th of March is again a Friday. At 12:30 this will expire. As you may know, your regular futures contracts in the equity markets, the expiry is on Thursday and the timing is also different over there. But this is the currency market. So you can see over here, there are different pairs. There's USD INR, there is GBP INR, there is JPY INR, there is Euro. There are different pairs available over here. So let's now figure how to take a trade. Say I want to take a trade for the month of March over here and I want to trade in USD INR. So I would click this button and look at buy and sell option both over here. So I can either short it or I can go long on it. Now when I am taking this trade, if I am buying, I am simply buying at this price. I will make money if this price goes up. If I am selling, I will make money if this price goes down. Which also means that if I am buying, my prediction or my analysis or my hope is that the USD value will go up and that's why this price will go down. If the USD value goes down, this price will go down and I will take a shorting trade. Now, how does this apply in a practical position? So let me explain. Suppose someone is going to pay me $10,000 for any service I have provided in the end of March or in the first week of April. And I know that the value of USD today is 82.67. I do not want the ambiguity of this coming down to 81 or going up to 83. I want to lock my income today. So in which case, what would I do? I will sell $10,000 worth of USD today and I will wait for my payment to come in, and whatever date my payment comes in, I will go back and sell it at the current price. So effectively I have locked my income at 82.67 because if the price goes up, I will over here in this case, I will lose money because this value will go up. But I will get a payment of $10,000 from my client, which will give me some profit and I will set it off. If this value goes down, I will make money on this trade, but my client will be paying me less. So it's basically that I'm locking my income in advance by taking this trade. So that's one practical use of a futures contract. So I can go to buy and I can say, let me buy 10 quantity. Now you're saying, why am I buying 10 quantity when I was talking about $10,000? This is because one lot of USD INR is 1,000 USD. And the margin over here is an astonishing 40x because currencies are not as volatile. And that's why for $1,000, I'm only paying 2,000 rupee of margin. And if I make it $10,000, my margin is only 20. So let's take a trade for our purpose with $3,000, which is a lot size of 3. Now I could take a intraday trade over here, which means at the end of today, this trade will have to close. In this case, the daily market closes at 5 p.m. and I have to close my trade myself at 4:45 p.m. if I am doing an intraday trade with Zerodha here. If I do overnight, I have till the last Friday of the month when there is expiry, and that day 12:30 is the expiry. These numbers may change. I will give you a link to a help article where you can check the latest dates and times so that whenever it changes, you are also up to date, or you can always comment and ask me. For the purpose of this trade, let's go with the overnight option so we can wait till the end of the month. My margin can be refreshed to roughly 6,000 rupees. Let me click this. The charges are only 24 rupees over here. So you can look at the brokerage while buying and while selling both. I'm going to pay 20 rupees and there are some other nominal charges. So it's not very expensive. This is also a very small trade in the currency market. So let me swipe to buy this. I'm buying it at the market rate. Now, here is the thing. I thought that BCD is activated on this account, but it isn't. And let's quickly look at how to activate that as well. Let's go to console. Within console, there are different segments that, as you may have seen, which we need to enable. Now, here is where I made a mistake. I had my NSE activated, but BCD was not activated. CDS was activated in my case. So let us take the same trade in NSE. Again, if you're wondering how do you enable currency trading in your account, these are the options over here. I just remembered BSE was not enabled in my case. So this time we have CDS over here, quantity is same, market overnight, margin is checked, I can swipe to buy. So now I am taking a trade which should go through. If I go down to my portfolio, within which I can look at positions, and within positions now this trade is showing up. I have essentially taken a bet that USD will go up in value by the end of March, and my live PNL will keep showing over here. Whenever I wish to exit the trade, I can click this and click the exit tab to exit. Now again, currency are not very volatile. So in this kind of a quantity where I have taken, say, a position of roughly 2.4 lakhs, a 1% drift here and there will make me 2.4 thousand rupees either in profit or loss. So that's how the dynamics are. If you have any questions, please comment. I am waiting for you to subscribe to my channel. So please do that as well. See you next time.